Company withdraws its full-year guidance, announcing, as we said, a bunch of cost-cutting measures, including deferring hiring, closing offices, shutting 5 corporate locations. Jim, a lot of discussion about what this means in the context of some of the other warnings we got this week.
Yeah, I'm calling it 70-30. 7% of the problem is here in macro. China, frankly, China is a disaster. Okay, disaster. Europe, man-made, obviously Putin there, not enough money after you pay your electric and your heating bill. Our country, slight slowdown. David, the cost structure here, as you have said over and over again, is out of control.
It is. And I wanted to talk to you about this, and I think it's so interesting you just said 70-30. Because I have a number of people who would say, this is more about execution than it is about macro. They can blame macro all they want. European business, not good. The margin profile of the ground business in the U.S. is a disaster. The express miss was a profit miss, was almost equal to the entire profit miss. And are we really going to see this from UPS? No. Or is this more reflective of what, frankly, the activists had been talking about, that is a lack of execution on the part of FedEx?
Do you know how?
Obviously, macro plays a role here, but the question is how much, because a lot of this market is depending on the idea that this is not a FedEx problem.
Do you know how much time I spent on that 70-30, betting that maybe it's 60-40?
Okay.
Never felt, I don't think 50-50 can't do that. But the reason why I think that I may be too low is that the actual revenues weren't that bad. $500 million miss, bottom line, not top. So I think, David, if Raj hadn't said worldwide recession, I think what you conclude is cost structure out of control, given the fact for slight decline.
And also, you do wonder, do they have a complete, sense of their business? I mean, it wasn't that long ago where they came out with their fiscal year 23 guidance that was above the street.
June 29.
They didn't raise it per se, but they came in with a number that was above. Now we're talking, Jim, 40% below that, only 2-3 months later. Look, granted, the economy has changed. Nobody's saying it hasn't. And certainly Europe, as you point out, and perhaps, and much more so Asia.
Well, how about each week getting weaker? Right. And I think that, and Carl, we got to talk about this. I don't think we can talk enough. I know there's some Chinese numbers that came out tonight. I don't care anymore about the government numbers from China. I don't think they're telling us the truth. It's a hard charge. But when I listen to what the CEO of FedEx says about China, it's worse than before the lockdown. It's worse than through the height of this COVID. What the heck is going on in China?
Right. So are you going with the school of thought that says if this were really truly macro, like mostly macro, we would have, plenty of companies have had lots of chances to say it last couple of weeks in conferences, aside from the Huntsmans and the Nucors and even the GEs?
Well, look, I don't want to get away. I mean, this is a macro story. It's a macro story because of China economy and flying planes to China. And as David's always said, maybe they got too many planes, they're flying them back half full. Europe is happening so quickly because these bills are mounting so fast. The U.S. was very hard. I pressed hard on U.S. to find out how bad it is, and it's not as bad. But they've got a lot to fix here, and they got to fix it fast. They got to fix it faster than I thought they had to. And they're doing it, unlike Carol Tomei, who did it when UPS was strong. They're doing it in a very weak environment, weaker than people realize. And I, at one point, said at the top of my show, is Jay Powell watching this? Now, David correctly criticized me that I was too glib. I meant to really just try to minimize on the conference call yesterday. I have with club members. I said, look, when I say this is a good time for healthcare or this is a good time for soft goods, but if it really is buying services and not packaged goods, well, that's got great implications too. But David, it's bad.